In the pursuit of wealth and prosperity, understanding the influences of your personality and behaviors can have a profound effect on your financial success. The Chinese zodiac, with its 12 animal signs, offers unique insights into how different traits manifest in financial decisions. Some individuals, depending on their zodiac sign, may accumulate assets that ultimately hinder their path to financial independence, creating barriers that keep them from reaching their full potential. This video explores the worst assets that can keep you poor, aligned with your Chinese zodiac sign. From impulsive spending to over-reliance on depreciating items, we will dive into each zodiac sign's financial tendencies and how they might inadvertently trap you in cycles of poverty. If you've reached this part of the video, please comment this affirmation tailored to help avoid the worst assets that keep you poor, aligned with the wisdom of your Chinese zodiac. Guided by my Chinese zodiac, I release poor and unwise assets and attract only true and lasting prosperity.
Before we get into the video, please give this video a thumbs up and subscribe to our channel if you're new. Now let's begin.
Let's start with the year of the rat. Excessive focus on tangible assets. Rats are known for their resourcefulness and quick thinking, often finding ways to profit in creative and unexpected manners. However, one of the worst assets for a rat to possess is an overfocus on physical, tangible possessions, such as luxury goods, real estate, and material assets that quickly depreciate. While the rat is naturally inclined to invest and accumulate wealth, it is easy for them to get caught up in the pursuit of status symbols, cars, watches, expensive clothes, which might not necessarily contribute to long-term financial growth. These tangible items can become liabilities instead of appreciating assets, draining wealth rather than adding to it. The solution: the rat must learn to balance their natural ability to invest with the wisdom of investing in appreciating assets such as stocks, bonds, or other long-term investments, rather than excessive material goods. Diversifying their portfolio with income-generating assets is key to avoiding financial stagnation. Ox. Stubborn investment in traditional assets. The ox is diligent, dependable, and practical, but their tendency towards stubbornness can result in poor financial decisions. An ox might hold on to traditional investments, such as real estate or family heirlooms, even when they no longer generate income or have appreciated in value. For instance, an ox might hold on to inherited property that has become too costly to maintain or is located in a less than ideal area for growth. While these assets might have sentimental value or historical significance, they can also trap the ox in outdated financial strategies, preventing them from diversifying their portfolio and making better financial decisions. The solution: the ox should remain open to new investment opportunities that may require stepping outside their comfort zone. This could include exploring modern financial tools, such as stocks, index funds, or peer-to-peer lending, which offer more potential for growth than traditional, static assets. Tiger. Risky speculative investments. Tigers are known for their boldness and assertiveness, traits that often lead them to take risks in the financial world. This drive for success can sometimes manifest in the form of speculative investments, trading volatile stocks, cryptocurrencies, or other high-risk assets with the hope of quick returns. While tigers are naturally ambitious, these types of assets can quickly deplete their resources if the gamble does not pay off. High-risk investments, while enticing, can create financial instability, especially when they are pursued without sufficient knowledge or a solid strategy. The tiger's natural impulse to leap into these ventures can sometimes overshadow prudent decision-making, leading to poor asset choices. The solution: tigers should temper their impulsive investment decisions with thorough research and risk management. Allocating a portion of their funds into low-risk, stable assets like bonds or ETFs can provide a safety net and ensure that they are not overly exposed to financial jeopardy. Rabbit. Over-reliance on security-based assets. Rabbits are known for their cautious and prudent nature, often preferring stability and security over risk. However, this inclination towards safe, Low return assets can result in the rabbit accumulating too many assets that offer little in terms of growth. For example, keeping all their wealth in savings accounts or low-yield bonds can keep them in a comfort zone but ultimately leads to stagnant wealth. While these assets are certainly safe, they often fail to outpace inflation and produce the returns necessary for building long-term wealth. The rabbit's excessive focus on security might inadvertently keep them poor by preventing them from exploring more lucrative, albeit riskier, investment options. The solution: the rabbit should consider diversifying their investments to include a mix of both secure and growth-oriented assets, such as stocks or real estate. By embracing moderate risk and looking for opportunities that offer higher returns, the rabbit can break free from financial stagnation. Dragon. Obsession with overvalued assets. Dragons are charismatic, ambitious, and often larger-than-life personalities, but they can sometimes become obsessed with high-status assets that are not necessarily profitable. Whether it's owning an expensive car, lavish home, or luxury vacation property, the dragon's tendency to acquire overvalued assets that only offer a sense of prestige can be a significant hindrance to wealth accumulation. These assets may provide temporary satisfaction but are often draining in terms of maintenance costs, taxes, and other financial burdens. The solution: dragons need to evaluate their assets critically and learn to invest in things that add real value, such as businesses, dividend-producing stocks, or real estate that appreciates over time. Redirecting their energies from flashy, short-term symbols of success to long-term wealth-building strategies will help them thrive financially. Snake. Tied up wealth in non-liquid assets. The snake is intelligent and calculated in their financial decisions, but they can sometimes tie up their wealth in illiquid assets, such as intricate collections, art, or luxury goods, that do not generate passive income. While these items may have inherent value, they are not easily liquidated and often cannot be leveraged for immediate financial needs or future investments. This over-reliance on non-liquid assets prevents the snake from building an adaptable financial portfolio, which can lead to difficulties when they need to access cash quickly or make new investments. The solution: the snake should aim to keep a portion of their assets in liquid forms such as cash, stocks, or bonds that can easily be accessed or sold. Having a balance between illiquid and liquid investments ensures the flexibility needed to take advantage of financial opportunities. Horse. Overspending on lifestyle and experiences. Horses are known for their energetic, adventurous, and freedom-loving nature. They often seek a life filled with experiences, travel, and enjoyment. However, the horse's desire for excitement can sometimes lead to overspending on lifestyle choices, such as frequent vacations, extravagant outings, and the latest gadgets. While these assets might bring temporary joy, they can significantly deplete finances and contribute to an overall lack of long-term wealth accumulation. The horse may be inclined to live in the moment, spending money to fuel their experiences without considering the financial consequences. This spending habit can result in accumulated debt and a lack of savings or investments, preventing them from building a solid financial foundation. The solution: the horse should strike a balance between indulging in their love for adventure and ensuring they have a financial cushion for the future. Prioritizing experiences that offer lasting value, such as investing in personal development or property, can help the horse find fulfillment while securing their financial future. Goat. Emotional investments in people and assets. Goats are compassionate, nurturing, and often put others' needs before their own. This tendency can sometimes lead them to invest emotionally in people or assets that do not offer financial returns. For example, a goat might lend money to friends or family members without any formal agreement or investment, or they might purchase items with sentimental value that don't hold significant resale value, such as extravagant gifts or collectibles. While these acts are driven by love and a desire to help, they can leave the goat financially strained or even in debt. Emotional investments can cloud judgment, leading the goat to invest in things that ultimately do not serve their financial interests. The solution: The goat needs to create boundaries and assess investments more logically, focusing on assets that contribute to financial growth rather than emotional satisfaction. While it's important to care for others, the goat must prioritize financial stability to avoid being taken advantage of. Monkey. Overconfidence in unstable ventures. Monkeys are creative, intelligent, and energetic, but their overconfidence can sometimes lead them into unstable ventures that promise big returns with little actual value. For example, they might pour money into business ideas that sound promising but lack a solid foundation or proper planning. The monkey's tendency to jump from one idea to another, without seeing through previous projects, can lead to poor asset choices and financial losses. While monkeys are skilled at coming up with innovative ideas, their enthusiasm often results in investing in ventures that are too speculative or unproven. The solution: the monkey should work on tempering their impulsive nature with careful planning and due diligence. Taking the time to properly research opportunities, creating a concrete business plan, and focusing on long-term success will help the monkey avoid financial traps. Rooster. Overinvestment in appearances. Roosters are known for their confidence, pride, and attention to detail. While these traits serve them well in many areas of life, they can sometimes lead to poor financial decisions if they invest too heavily in appearances. Roosters may acquire assets like high-end clothing, brand name items, or luxury home decor to project success, even if these assets do not yield any tangible returns. While it's important to look polished and presentable, the rooster's obsession with outward displays of wealth can detract from investing in more meaningful, income-generating assets. The solution: the rooster should focus on building a portfolio that includes investments such as stocks, real estate, or businesses that generate income over time. Once the foundation of wealth is secure, then the rooster can indulge in luxury items without sacrificing their financial future. Dog. Over-reliance on safe investments. Dogs are loyal, hardworking, and dependable, but their inclination towards safety can sometimes prevent them from achieving financial growth. They may prefer to keep their wealth in ultra-safe investments, such as bonds or fixed deposits, which offer little to no risk but also minimal returns. While these assets provide security, they often fail to keep up with inflation or generate substantial wealth. By focusing too heavily on preserving capital and avoiding risk, the dog may miss out on opportunities that could offer greater returns, such as stocks or real estate. The solution: the dog needs to find a balance between safety and growth by including a mix of low-risk and high-return investments in their portfolio. By embracing some level of calculated risk, the dog can ensure their money works harder for them and increase their wealth over time. Pig. Unnecessary spending on comfort and luxury. Pigs are known for their generosity, good nature, and love of comfort. However, their desire for indulgence and luxury can lead to unnecessary spending on comforts that do not contribute to their financial security. Pigs may overspend on lavish vacations, expensive dining, or home luxuries, which can take a significant toll on their finances. While the pig enjoys life's pleasures, this tendency to overspend on non-essential items can lead to a lack of savings or investments. These assets may offer temporary satisfaction but fail to build long-term wealth. The solution: the pig should practice mindful spending by focusing on experiences that bring lasting value and investing in assets that can appreciate, such as real estate, stocks, or even starting a business. Redirecting their focus from instant gratification to long-term growth will help them secure their financial future.